Hello everybody, welcome back for another video. Hope you're all having a great day and that you are all doing well. To start things off, Binance established itself as the largest cryptocurrency exchange in the cryptosphere, and its token, the Binance coin, has lived up to expectations by climbing into the top 10 of cryptos. The coin climbed to the 8th position and registered a significant gain. Forbes, a prominent publication, acknowledged the exchange's performance along with the soaring token. The post was shared by the CEO on his Twitter social media handle. Here's the actual tweet right there. Tron's Foundation CEO and founder, Justin Sun, congratulated Changpeng Zhao for his achievement and called Binance Coin the new Bitcoin. He said, "Huge congrats on BNB, a new hashtag Bitcoin." Binance has been growing in popularity, and Maddie Greenspan, eToro's senior analyst, had spoken about its industry dominance earlier, saying, Binance Coin has been able to buck the crypto correlations principally because people buy it as a way of speculating on industry growth. If the markets are moving, it means people are trading, and Binance has a big share of those volumes. Something that I didn't really get before, and I kind of get it, and this is weird. It's a very weird line. Changpeng Zhao has noted before in the past that Binance Coin is not a security, but I've come to the conclusion in my own weird way. People are buying. First of all, if you've never used Binance, it's a great exchange. Two, you get like a discount if you actually use the Binance Coin when you're doing trades. There's also a thing if you have accumulated like other coins that you just don't really want, you can actually push them and into Binance coins, like you can trade them automatically with like a really cool feature. I've realized that even though we differentiate the way that the cryptocurrency space is growing or has grown, apart from traditional finance, as far as like buying stocks or like holding a share of a company, Binance Coin is kind of in its own weird, maybe even if it's just like 10% of a whole. It's kind of like buying a piece of Binance. I know that sounds really weird because we're also not supposed to think of cryptocurrencies in that way, like it's just like a token that can be utilized on the platform. But as we are moving into more of a blockchain-oriented tokenization of everything kind of space, and it doesn't appear that anytime soon that Binance is going to have an IPO or try to go public on a actual normal stock exchange, I've noticed that a lot of people, not financial advice, have been buying up Binance Coin because the price is continuously going up because the coin has so much usage, and also on speculation because it's going to be the main coin of the Binance decentralized exchange. I don't know. It's all very interesting. I think Binance Coin is going to continue to rise. I don't know if it's the new Bitcoin. It's nice of him to say that, but I think when I first heard about the coin, I thought it was kind of ridiculous, but the more that you look into it, it seems like it's going to have a very bright future because Binance isn't going anywhere. The token's not going anywhere. They're only looking for like more use cases to be able to use the actual coin on different platforms. Other exchanges are listing Binance Coin. It would be very, very weird. No, it's kind of like that. Like imagine buying 10 Binance Coin. Like imagine you're buying like a share in the company, even though it's not really a share, just a token that can be used on the platform. And then the price of the token ends up hitting 1,500 one day. It's like you are holding, I don't know. Do you get what I'm saying? Kind of, maybe ish. Am I just talking completely insane? Maybe. But the point is, I don't think this coin is going anywhere anytime soon. When I first heard about it, I assumed it was just another coin that we just didn't need. But this is probably one of the most used coins, or coins that has the most use out right now. Kind of interesting. But yeah, let's move on. So we spoke about this yesterday, and I'll go over that a bit, and then I'll morph it into exactly what people think could potentially happen because of it. Forbes reported that BlockFi, a company that raised $52 million from investors like Mike Novogratz July, has launched a game-changing product. BlockFi has reportedly given clients across the globe the ability to make up to 6.2% annual interest on Bitcoin and Ethereum deposits. This interest account offering will also go alongside BlockFi's loan offering, which allows users to borrow more than $2,000 at a 4.5% interest rate if they deposit collateral denominated in 3 leading cryptos. So what it came down to is that yesterday we heard news from BlockFi that they were releasing something, and I thought it was actually kind of cool as well, because typically if you put your normal money, your normal paper money, into a bank account, you are probably getting 0.5% or less than 0.5% on your money back per year. And part of the issue is that because we do have inflation with normal fiat currencies, the inflation rate is normally typically anywhere from 1 to 2%. They try to have it around these levels. So you making less than 1% does nothing. You're pretty much losing money. And if you have, the idea is that you can put your cryptocurrencies with them. You get 6.2% by the end of the year on the amount of crypto that you put inside. Like, apparently you start making that money immediately over the course of, whatever. I think you get paid out every month, I think they said, like whatever the case might be. It comes down to the fact that they are a lending platform, and when other people are looking for loans, they apparently use your crypto as the collateral, from what I'm understanding, and this is how you get paid back, because they're paying you back from this interest rate that they are being paid from other people. Get it? Someone takes out a loan, they have to pay this back. The interest rate that they're paying back then goes of a portion of it to you, and this is how you get this after a full year. So you get around 0.5% every single month from the money that you have inside, and also you're able to take out your crypto anytime that you want. This all sounds like I'm advertising for them. I'm not. I'm just giving you the rundown. I realized as I was saying it, I sounded like a commercial. And then what was the other part? Yeah, the most important part is that you can take your money out at any time. That's why I decided to talk about it yesterday, because, most other platforms, they have you, especially banks, if you lock your money in a bank for like a year or with a CD or something like that, you can't touch it until that period is over. So the fact that you would still be getting money immediately, and then also you'd be able to take your money out, your crypto whenever you wanted, is a very big thing. So it's also backed by the Winklevoss as well. So here's where it gets kind of interesting, and I do kind of agree with this. I think this might be a bit more pessimistic than some people should be in the cryptocurrency space. However, because of what we've seen in traditional finance, it does or would not surprise me if this does actually end up happening. It says, although the premise of this venture makes sense, some are wary it could depress Bitcoin over time, and it won't make sense, but I'll try to explain it to you. Industry commentator, his name is Obi-Wan, touched on this subject matter in a recent Twitter thread. He noted that BlockFi rehypothecates the capital user's deposit, that's your money, which means the company reuses collateral to borrow cash, creating an environment that could be rife with trading of the rehypothecated asset, inflating the asset value a handful of times with multiple claims and no backstop. I'll make sense of that all in 1 second. Here's the actual tweet for it. Obi-Wan claims that Wall Street and shadow banking entities use such a strategy to create paper claims or derivatives on pledged assets. While many argue that Bitcoin isn't susceptible to such a happenstance, as it is the hardest money in existence by Austrian economic standards, but the introduction of BlockFi's deposit account could turn the tables. Wall Street hotshot turned Bitcoin diehard Caitlin Long argues that BTC spot price could be depressed, spot price, by synthetic Bitcoin. That's the most important part. Created through derivative products, as this would push the supply of the cryptocurrency above 21 million. So for everyone who had no idea what I was just saying, the idea is that, you know what Bitcoin is? You know how many Bitcoin can ever be created? It's 21 million Bitcoin. This is hard coded into the actual thing. What happens in the real world outside of the digital era, especially many, many years ago before people were using computers and stuff like that on Wall Street, is that another way of kind of making this a bit simpler, what companies still do now and what they used to be able to do a lot more before. Let's say you are a company. You yourself, you create a company, you're selling oranges. You have 1 million stock out there that you decide, I'm going to have a company. Here's 1 million stock. Everyone can buy a piece of it. People have figured out a way that kind of, if you give this company, these people right here, let's say 5 Bitcoin, and they know that you're not going to touch your Bitcoin for an entire year because you want that full 6.2%, they could, in essence, lend out extra Bitcoin as if they had more Bitcoin, because they know that you're not going to touch it. It's very difficult to explain. Like, I can understand it in my head, but when it comes down to saying it out loud, it's pretty much saying they can declare that there's more Bitcoin going around than there actually are, simply because they know that you're not going to touch your Bitcoin. So in essence, if they're holding 100,000 Bitcoin, they could essentially lend out even more Bitcoin than they actually have, because they're going to, it's very difficult. It's very, very difficult. I've heard this mentioned many times. I do apologize that I can't like 100% explain it to you, but it's pretty much, you can, with stocks, you can pretty much tell people that you have something that you don't have and still get the money for them from it. That's kind of the easiest way of saying it. Like, you can tell people that you have more Bitcoin than you're actually holding on to, and therefore kind of increase the supply. This is also a problem that many people were talking about a couple of months ago with people on Wall Street, not even specifically this one, talking about that they could hold X amount of Bitcoin that they're just not telling people, but they could give out loans in accordance with how much Bitcoin that they actually don't have. And because the idea is that you don't expect everyone to kind of rush your platform at the exact same time to take all their money or to ask for all their money at the exact same time, you can always kind of get around it. And the reason why Bitcoin's price in the future is expected to go up multiple times is because of the hard cap of 21 million. And we know this mathematically. We know that how many are going to be mined. We can't mine anymore. But if you hold a certain amount and you can send out multiple claims multiple times to different people without them actually understanding how much that you actually have, I hope that made sense. I know it really didn't. But it's an issue where pretty much there have been companies before who had 1 million stock, but they were selling them as if they had 1.5 million, so they were making extra profit. And then you realize that when people are trying to sell, or like if there's a market crash and people all want their money back, there's not enough of 1.5 million stock to actually repay people, because there's only actually 1 million, if that kind of makes a lot of sense. So the idea is that if this does end up taking off, they could, I don't know if this one company is going to do it, but I'm pretty sure it's been spoken about in more shadowy places, that you can pretty much say that you own 1 Bitcoin, but issue certificates for 10 Bitcoin to other people, because you won't expect them to all want to get the full Bitcoin back at the same exact time, if that makes a lot of sense. Think of it this way. Remember when we had the stock market crash of 2008, 2009, and people in the United States were going back to the bank trying to take all of their money out? You can Google this. You can find like YouTube videos as well. People were standing in line trying to get their money out, and then eventually like the banks were closing and they had like armed guards outside pretty much telling people that no, they couldn't get their money. And it turned out that's because the bank didn't actually hold that much money. So the bank will tell you on a screen that you have, $8,000 in your bank account, but when you try to actually withdraw it, you and other multiple people, the bank doesn't actually hold that much money, because they're not expecting everyone to go back to the bank, thousands of people at the exact same time with their hands out. They're expecting maybe 2 or 3 people, and that they can kind of handle. That kind of explains it a bit more. I still think this idea is very cool, but I also think of things from a very rosy perspective where things are nice and everybody wants to kind of do good things for the world, but that's not how the world actually works out. So the idea is that because people would be giving them their crypto for an entire year, they would be able to rehypothecate and pretty much create like Bitcoin paper notes and give them out to multiple people, because they're not expecting everyone to kind of ask for their money back at the exact same time. Like, logically, if you can have it with them for a year and get 6.2%, you wouldn't do it earlier to only get 3%. You would stay with them for the entire year to get that full amount. But during that entire time of the year, they would be able to continue issuing debt for Bitcoin that they don't actually have, because if someone gets debt in January and another one gets it in April, they're not going to ask for, or they're not going to repay it at the exact same time, or they won't ask for their money back at the exact same time. If that kind of makes sense. It's very difficult. And once again, I can't explain it as well as I can like see it flowing around in my head. But there was someone talking about this before on, I think, the Unchained podcast. I think that's what it was. She was saying part of the thing that she's really afraid of is that Wall Street doing something like this, buying up a huge amount of Bitcoin. This is why I said before, I think if people don't think that Wall Street and banks aren't buying up Bitcoin, you're in another world. Buying up so much Bitcoin that people know that they have a huge amount, but they start issuing debt based off of the Bitcoin that they have, because people want to take out loans, people want to take out so and so, and essentially creating 100, air quote, paper notes or paper claims for the amount of Bitcoin that they have. So let's say they actually hold 100,000 Bitcoin. and they create 100 notes for that, they would essentially then have, 10 million air quote Bitcoin that they would be able to issue out debt for, even though they only have 100,000. And the moment that they do this, other people will start to do this as well. And we can have a situation where Bitcoin is supposed to only have 21 million, but we end up having 2.1 billion floating around, which then, like the article says, ends up suppressing the price of Bitcoin. Took me a while to get there, but I got us there. And this is pretty much what they're talking about. Like I said, I think it's kind of cool. As long as, because we are in a blockchain fueled world, or we will be more so there in the next year or two, as long as this company, especially if they're going through the Winklevoss, one would assume that they are going to be hyper transparent as far as what they even issue out, as far as debt or the loans based on the amount of cryptocurrencies that they have. It should be okay, at least for this company. But yeah, let's move on. I'm going to fly through this one. It says fly and I saw fly. Anyway, Goldman Sachs put out a pamphlet, a newslet, something talking about that they're looking for new people. They're trying to hire new people, and they also put a new policy for their dress code, because apparently before it had to be suit and tie and so and so and so, but now they're trying to have a more welcoming atmosphere for people who they're looking to hire. And now people think that because that they're doing this, typically when you see techies or tech nerds or people who are into IT, they're typically not wearing suits. They're wearing slacks, a t-shirt that has a graphic design on it. They look a bit more relaxed. So people are assuming that Goldman Sachs is gearing up to be able to hire a huge crypto team. I'm pretty sure that that's probably already underway. What's interesting about this is that apparently this was supposed to be what's it called? An internal thing, and apparently someone leaked it. And this is where the speculation is coming from. Goldman Sachs is huge. I'm pretty certain that they should potentially probably already have their own crypto team or a blockchain team, or maybe they're just trying to be more welcoming. I doubt that part. Anyway, like I said, breezing over, this is actually relatively major news because life and everybody wants to speculate, but apparently Goldman Sachs could potentially be hiring a cryptocurrency team because they're letting people dress more relaxed in their offices. Yup. Let's move on. Next up, crypto whale watchers are following what appears to be Ripple's first over-the-counter sale of XRP this month. Somebody bought $60 million, still millions, 60 million XRP. That came out to around $19 million that was sold to an unknown third party. There are a lot of transactions floating around like this. A lot of people are buying huge, massive portions of it. The San Francisco company sells portions of XRP holdings in over-the-counter deals throughout the year, which means the deals are negotiated in advance at a fixed price. The latest transfer is part of a massive shuffle of Ripple's XRP, a delicate dance the company executes every month. 12 times a year, Ripple releases 1 billion XRP from its escrow accounts in order to have enough on hand to sell to accredited investors, institutions, and crypto exchanges, and then locks the remaining funds back into an escrow at the end of the month. Every single time that they release something, people are buying huge amounts. The last report that we had, they said that they sold $129 million worth of XRP in the fourth quarter of 2018. So that's only within 3 months. And they sold $500 million worth of XRP across the entire year. It makes you wonder who is buying up $500 million worth of XRP, or who has the money to buy even six. Can you imagine having the money to buy 60 million XRP in one go and then still just going on vacation because you're unbothered because you still have money in your bank account? Anyway, a lot of people are paying attention because for some reason the last 3 or 4 weeks there seems to be an uptick, if you will, in the amount of people who are buying massive amounts of Bitcoin, Ethereum, and XRP over the counter in huge amounts, and we have no idea who they are. But let's move on. This ties directly into what I was saying before, and I've said many times. In a report published earlier today, the Finance Committee of France's National Assembly has stated that it would be appropriate to ban all cryptocurrencies focused on providing greater anonymity to the user. The committee went on to write that such cryptocurrencies posed heightened risk of various financial crimes. The rest of the report was not all damning to the wider blockchain and crypto space. It states that greater understanding of the technology and the ways it is being applied were required by regulators. As part of the report published today focusing on blockchain technology and its application in the cryptocurrency, the president of the Finance Committee of France's National Assembly has stated that it would be appropriate to ban all cryptocurrencies that enhance privacy for the user. As Forbes reported, Eric Worth, right in the introduction in the document, he said, it would also have been appropriate to propose a ban on the dissemination and trade in cryptocurrencies built to ensure complete anonymity by preventing any identification procedure by design. This is the case for a certain number of cryptocurrencies whose purpose is to bypass any possibility of identifying the holder. To date, regulation has not gone that far, end quote. So there are some cryptocurrencies that, while they are private, that you can also make them unprivate, such as Zcash, and this is why this was listed onto the Winklevoss twins crypto exchange. And people were like, why did they add that? I assume they have a huge stake in it. They probably got it very early, and now they were looking for a way to kind of add it. This is one of the reasons why I don't care for private crypto coins, because multiple governments around the world have talked about banning them. They don't like them. I have a feeling that's definitely where it's going to go. Yeah, remember, we are in a depressed market. If we get to the point where Monero, Zcash, rather Monero and Dash, maybe even Grin as well, and maybe a handful of other coins. Let's focus on Dash and Monero. If these coins ever hit $1,500 per coin and people are able to transact back and forth, and the government realizes that they're losing out on money, these coins will be banned very, very fast. And at some point, I do believe that Dash and Monero are probably going to hit over the four-figure amount. So just something to keep in mind. A lot of governments are coming out openly. They don't want to ban crypto. They love blockchain, but they do not like anonymous cryptocurrencies. And that is probably looking like where things are going to go. All right, everyone. That is definitely going to do it for this video. I hope you all enjoyed. Hope you all are having a great day, a great morning, a great afternoon, great evening, wherever you are. Wherever you might be, I hope it's incredible. Thank you all once again for watching and listening. I do appreciate all of your support. Binance coin is just still shooting up. It's the weirdest coin in the entire world. As always, a very special thank you to my Patreon supporters. They are Carr Birchenough, Cody, Jeffrey Ramsey, Richie Rich III, Amy Starsheen, Jeremy Fox, Jared Schneider, Jim Gardner, Crypto Joe, Jaleel Dowdy, Joey Carafa, Wise Night Owl, singer-songwriter Mike Savitz, Nick Kanaya, Anthony Charles, Yasha Harari, Travis Haynes, Nick Mangialavori, Professor Wally from Gunbot University, Arthur, Yaku L, Doug, Brady Niels, Rai, Gilboa Snake, and Vlad the Impaler. Thank you all very, very much for your generosity. I do appreciate it. And yeah, I'll talk to you all soon. See you.